My fellow Palantarians, Palantir reported a killer quarter, crushing all estimates, but the stock dropped after hours. I'm going to dive a little bit into their earnings and explain why I think that's the case. Now, as you guys can see, they had a nice 39% year-over-year revenue growth. They raised their revenue guidance. They basically raised everything around the board. And that's all amazing. Now, Palantir is a beautiful, beautiful meme stock with one of the best cult followings I've seen. This stock is amazing. It's very strong. It's quite secretive. It just has the vibe. But everybody knows this is pretty overvalued. Now, we can look at the price to sales. We can look at the price to earnings. I mean, this is a $120 stock doing 8 cents of net income in a quarter. That's pretty horrible. So I didn't come to bash this stock. I actually really like Palantir. I've owned Palantir in the past. But I want to share a stock that I like much better. This beautiful company is called Next Vision. Next Vision essentially makes cameras for drones. Now, we all know that drones are an upcoming trend. The market's expected to grow well, and so are the cameras for these drones. Next Vision is a very high quality company that has many advantages, and essentially their only competitor is a Chinese company, and we all know that you're not having America or Europe buying Chinese drones or drone cameras because that is a security concern. So despite that, they have these advantages and not much competition, and they have great margins despite these advantages, including cost. So I first introduced this beautiful stock on January 2nd in five stocks to buy for 2025. As you can see, it's right here. I reiterated this call on March 10th. And if we look, you can see that this stock from my first call is up 57%. From my second call is up 20%. And I don't even need to show you the chart for the markets. I'm sure you guys can understand this is well outperforming the same time frame. Now, the key I want to share with you is look at this PE ratio. It's much lower than Palantir's, but as I showed earlier, Palantir had a 39% year-over-year growth for the quarter, and they're looking at 36% for 2025. This company is guiding 39% and is much likely to beat those expectations. So you're paying a much cheaper price for faster growth, higher margin, less dilution. I mean, what more could you ask for? Now, some of you guys might see this beautiful chart and say, well, I want to buy on a pullback. I'm not comfortable buying on an all-time high. I want to share a story from Reminiscences of a Stock Operator. If you guys haven't read it, I highly recommend you do. It's considered the Bible of trading. But essentially, the main person, Jesse Livermore, says, every time a stock crosses 100, 200, 300, it basically never stops at a round number. And I guess if you guys think about that yourselves, I mean, when have you seen a stock stop exactly like at 100? It's almost always certain to go a decent amount of handles more. So very recently, this stock crossed 10,000, and this is actually for a lot. So one share is 100. So despite buying it at all-time high, valuation-wise, it's a good buy. And technical analysis-wise, and just that theory of crossing 100, it's a good buy. And one thing I also want to mention is when I first made this call on January 2nd, I can tell you it was at an all-time high. When I reiterated the call on March 10th, it was basically at an all-time high. This is an extremely high-quality company in basically one of the hottest and best sectors for the future, and you're paying a very modest price. So if you folks are long Palantir, I suggest you look at this company. It's basically better all around, and that's all I got to say for today. Thank you.